At the end of the 19th century, there was one new market that was poised to change society, from the way we work, the way we play, to our national identity: the automobile. The automobile industry made figures like Henry Ford into a titan of industry, and there was no hotter area of technological development and innovation than the automobile industry. Many people could envision how life-changing commercial personal automobiles were, and there was a gold rush to try to capitalize on the new technology. Even everyday people can see how life-changing and transformative the automobile would be, and you would be suckered to not try to capitalize on that and invest in the automobile industry. However, for every successful Ford, General Motors, or Chrysler, there were literally hundreds of unsuccessful, bankrupt, and forgotten automobile manufacturers. A quick scroll through Wikipedia shows the names of hundreds of defunct automobile manufacturers, most long forgotten. Automobile manufacturers including Acme, Baby Moose, Hercules, and Automobile. As an investor looking to pick the right automobile company to invest in at the beginning of the 20th century, you literally had to navigate a minefield of dead-end companies before you had the chance to even spot a Ford, GM, or Chrysler. With hindsight, we may sit here and say we would have spotted the genius of Henry Ford and his Ford Motor Company, and knew that the Red Jacket Automobile Company was doomed to failure from the start. But would we really, given marketing hype, complex financial statements, lack of engineering know-how, and financial analysts with conflict of interest? How many people at the dawn of the automobile industry actually knew what made the automobile industry tick, and how the rapid technological innovations would impact the different automobile manufacturers? Another industry that was equally, if not more transformative than the automobile industry is the commercial airline industry. We take for granted now that we can cross the Atlantic from New York to London in around 7 hours, or the Pacific from Vancouver to Shanghai in about 11 hours. But before commercial airlines, human flight was magical. And once again, it's easy to see how transformative the technology was and wanting to be part of it. But as famed investor Warren Buffett puts it, investors have poured their money into airlines and airline manufacturers for 100 years with terrible results. In 2003, according to Financial Times, Warren Buffett jokes that he has set up a free phone number to call counselors who would talk him down if he ever got the urge to buy airline stocks. In more modern times, people old enough to remember the dot-com boom probably won't forget the monumentalist internet bust of the 2000s. Here again, it's easy to see how transformative the internet was going to be on society and on everyday life, and wanting to be part of that. The need to get on the ground floor, to be able to tell our grandchildren that we bought stock in this tiny tech company and how it now secured their future. For every Google and Amazon, there are literally hundreds of Pets.com and Flues.com, companies that flared up with large investment dollars only to perish quietly into the abyss. Now, it's easy to bag on Pets.com, which reportedly lost money on every sale they made, but even companies that had solid business plan and sold tangible products and services like Cisco, the reported backbone of the internet, could still have been a bad investment. If you bought Cisco at the height of the dot-com boom, close to $80 a share, you wouldn't be anywhere close to making your money back today, more than 15 years later. Cisco currently goes for around $30 a share. So why do revolutionary technological leaps that spawn new industries and markets like the internet and automobiles not necessarily translate into wise investments? Well, here are a few reasons. Emotions. Revolutionary technologies like the internet and the automobile fires up our imagination as we extrapolate the possibilities and the growth. It becomes really easy to get caught up emotionally in a company that promises to revolutionize the world on a massive scale. And those types of emotions cloud our judgment and makes it hard to calmly and objectively process the fundamentals of a company. During the dot-com boom, nobody cared if a company made any money. People just cared about how many clicks and traffic they were getting. This is still kind of true today. We also want to get in on the ground floor to not miss the next big thing, especially if you're watching your neighbors get rich. Hype. The media loves to report on big technological revolutions because people like hearing about them, and it becomes a vicious cycle that makes it very hard not to fall for the hype machine. Websites and TV programs love to extrapolate on all the wonderful possibilities while leaving out the details like technical feasibility and commercial viability. Financial analysts are part of the hype machine too, and can rocket a company's stock based on rosy projections, not supported by much of anything.
Analysts would often appear on TV, and Liz Beyer admits they were under pressure to issue positive news to keep their clients happy.
Some of the bigger stars were cheerleaders, not analysts. And it was no longer about who was doing the best analysis, because the best analysis got you nowhere. It was who was being the best cheerleader for those companies. And that's problematic. That's troublesome.
Lack of information. A lack of information goes with cutting-edge technological revolutions. By being a new industry, not many people understand the mechanics of the industry, who the players are, how to turn a profit, or the size of the market. Who really understood how the internet worked back in the early heydays of the dot-com boom? How did ordinary investors at the beginning of the 20th century keep up with all the technological advances made to the automobile, and which companies were on the right track like Ford, and who wasn't? Did people back then know what made Google's search algorithm superior to Yahoo's and SG's? Do people back then even know what a search algorithm is? It's very difficult to invest well in industries that you don't understand how they operate. Now on to a personal example. A few years back, 3D printers were the new hot technology that many people thought would revolutionize the world, and I personally read many stories of how we would be able to print body parts, instruments, and even guns. People on social media were doing their part too, hyping the new world we were about to live in. Many 3D printing companies were launched, and several even had IPOs. Companies like 3D Systems Corporation, which at its height a few years back surpassed $95 a share. Today it's hovering around $13 a share. It seems that nobody talks about 3D printing anymore. It already seems like a forgotten technology.